Can you guys hear me now? Nina, tell me if you can hear me. Okay, let me know if you guys can hear me. My Wi-Fi is not good, I think. We can't hear you. No, you just do it. I don't need his help. Just go online and see if you can.
I'm mine. I mean, like, help you with.
Hello, hello, hello. You should be able to hear me. How about now? Yes. Okay, I knew it. Welcome, welcome, welcome. Listen, I think I might have a little bit of glitch in my Wi-Fi. I'm staying at my son's place in LA, and there's an issue with today. And patient with me. I know we missed last week. I was traveling last week, so thank you for your patience and your hopping on today. I really appreciate you guys. I know I haven't done a video in a minute, so I was doing one video every single day for literally the past 6-7 months, something like that. And it might not sound like a lot, but man, that is a lot. And then it's a lot more time consuming than what people think, because I was doing all of it, right? Like writing a script. I want to deliver content that people that's good for people, right? That you guys want to hear. And then it takes time to record it and edit it and do all these things. And so I think I took a break the last 5 days, plus I was traveling. So thank you for your patience in that. And I'm going to get back on I don't know about daily. I'm not going to commit to daily because it's a lot of work. Connection seems iffy. Sorry. But most of you say that you can hear me. Let's see. I think it might be buffering. I heard and then I didn't. What is up with my Wi-Fi? Let's see. Let me try one other thing. Can you hear me? Is that an ad? Fuck. You can hear me? Yeah. Okay. I think you guys can hear me. I think it might be, I think my Wi-Fi is not so good right now because I'm getting like a buffering thing. Connection is no good. Yeah, I don't know what the problem is. It says stream status poor. It seems to have normalized now. Okay, Nina said she can hear me. She can see me. Lorena says it seems to have normalized now. There is an issue, I think, with my Wi-Fi. I'm going to try to go a little bit and see how we can go. Who's got questions from recently? I know the market's been sort of like choppy, right? Lots of things have been down a lot. Who has some questions that maybe we can walk through a ticker? Let me know in the comments section here. You could still hear me, Nina? Yeah, I think it says it's buffering for me. Not receiving enough video. Not be getting a good connection. Let's try it. Ticker B and KGC went down bad. All right, let's look at that. B is and USAR. Nikki says, let's look at some of these. USAR is interesting. Hello, hello, hello. SoFi is one of my favorites. We can go through that. All right, there's a few that people are asking about. USAR, B, KGC, and SoFi. I'm going to go to B really quick because I think this is a fast one. B is Barrick Gold, I believe. Yeah, Barrick Mining. Listen, that is down, and I know I haven't done. I'm going to do a video soon on metals, commodities, that kind of thing. Listen, guys, when you guys see this kind of uptrend, look at this is the past 1 year, right? I think you guys can all see my screen. So you see Barrick is like, okay, it's kind of flat, up, 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 and it's up very nicely, right? So gold and silver have been up significantly recently. that's expected for it to, like people say crashes. I wouldn't use the word crash. I would say that things go up and things go down. It's like a standard thing. And if you're not anticipating that, you don't understand the market. Like you have to anticipate that with all tickers. Actually, what we can look at, and I haven't talked about this yet, but we look at like what we call retracement, right? So retracement, when we look at like, okay, it's like 20 bucks a share, then it goes to 50 bucks a share. It could probably retrace to around here, 30 bucks a share. So right now it's $46. I'm not here to tell the fortune, to tell the future. I'm not psychic like that. I don't know what's going to happen today, tomorrow, next week, next month. I do not know. A lot of times you guys, maybe we look at, not we, because I definitely don't, but you look at the news or something and you hear people talking about, they think it's going to go this way or that way. Man, they wouldn't be talking to you if they had really any inkling on where it's going to go. So first of all, I want to say I have no idea where it's going to go. However, if I look at like the patterns, like historical patterns of other tickers, Barrick Gold could go back down to 30 bucks a share. So be aware of that. Be conscious of that. If you're trading something like Barrick Gold, as an example, listen, you only want to trade it if you like it. If you like it at 50 bucks, you should like it at 40 bucks. You should like it at 30 bucks. You should like it at 20 bucks. That's kind of how you make money. You don't want to trade a ticker and then that drops and then you sell and take a loss and lose your money. No, that's not the good way to trade. You want to add to your position. Also, you don't want to like get scared. Listen, I want to look at RZLT real quick. I was looking at this earlier. This is something that somebody had mentioned not too long ago. I think you guys can all see my screen, right? Yeah, so let me know in the comments if you can't see my screen for whatever reason. This is a ticker that one of you guys, one of the people in my community, probably a few of you, talked about selling puts when it was here. It dropped to $1. Some of you sold your stuff and took a realized loss. The others panicked and didn't add more. If you're trading something, you should like it. And if you are trading it and if you like it, if it goes down, you should buy more, because this is a perfect educational example. RZLT, it went to $1.07. Where is it now? $3, $3.29. It's gone up 300% on the bottom, right? Now, that's not saying that you're going to pick the bottom or you're going to pick the top, but that is saying this. Don't sell. Let me back up a moment. Don't trade something if you're not okay holding it, and if you're not okay buying more if it goes down. Listen, if it's $1 a share, buy another 100 shares or 200 shares or whatever. Can somebody get the dog there? He's going to knock something off the counter. Nina. So you want to add more to your position. You don't want to do, number one, freak out if it goes down, and you don't want to sell your stuff and take a loss. USA rare earth. So that's kind of an interesting one. That's come down a lot as well. If we look at the volatility, let's take a look at the volatility. The volatility right now, implied volatility, right now USAR is trading at 22 bucks a share. If we just look at it like a $20 put example, the volatility is 150%. What does that tell us? That tells us it's going to go up a lot and it's going to go down a lot. So, hey, like going from 31 bucks to 22 bucks, that should be expected. Look at this drop, $43 all the way down to 10 bucks, 11 bucks. That's down a lot because it's volatile. If you guys are trading these volatile tickers, you got to prepare for that. You got to just trade it if you're good with buying more if it goes down. So keep that in mind. SoFi, one of my favorites. Let's just look at SoFi real quick. I like SoFi. I like the story of SoFi. 22 bucks. Right now it's down 2%. Yeah, it's down a lot. If we look at retracement, I mean, it could go down to, 16, 18 bucks a share, maybe. Buy more as it comes down. I was helping some folks. I'm doing this February session, which is like amazing. And I've been helping these guys do this kind of stuff where we create these spreadsheets where we calculate, okay, if I have 100 shares at this strike, and then I, got put the shares, if I was short a put, my adjusted basis gets to be this. Here's my, average basis on X shares. I encourage you guys all to keep spreadsheets like this. If you're trading and you're not keeping track of your lots, how much you paid for it, how much your adjusted basis is changing from getting assigned, short puts, or how much your average basis is changing based on buying more shares, you have to be doing that. Listen, trading options for income is not that hard. I want to go over a couple of really important points that I want you guys to understand, and then I'm going to go through some questions and the Q&A, and I hope you guys can all hear me. And if you can't, I'm really sorry about my Wi-Fi, because I am getting some messages that it's buffering. Next Monday, it should be straight. So if it's not straight today. But let me go through a couple of important things. Only trade a ticker that you are okay buying if it goes down. And listen, things go up and they go down. You have to be okay with that. Don't freak out if your stuff goes down. You must keep track on a spreadsheet like this. It's not that hard just to kind of create that. I'm gonna have a session, I think, to help people create these, because it's not hard to do, but I think you maybe just don't know how to do it. You just never did it before. You have to do that in order to be successful. And focus on realized gains. Listen, you want to minimize realized losses, and you want to focus on realized gains because you want to make money from week to week. And you want to look at weekly contracts this week, next week. It's hard to make money and be successful if you go out 3-4 months, I think. Maybe you could be successful. I found it difficult to do that because it's a lot of time where things can kind of go like this. And I find that it's much better if you just make a little bits of money on a weekly basis. It's like playing baseball. Like who cares about the home runs? Don't be swinging for a home run. Just swing for a single and just run the bases, right? Single, single, single. Sometimes you walk, and you want to win the game long term. That's what it's about. So let me go through some of these questions. Let's see. Robin Hood. Robin Hood. Oh, a lot of tickers. Boyle. It's part of an ETF, CRML. I don't have time to look at all of these. All commodities are volatile. Commodities are good, though. I have to say one thing about commodities. Commodities have a non-correlated thing to stock. So generally, when we think about diversification and correlation, it's actually, we don't want to own a bunch of things because we think sometimes it's diversified. And oftentimes, if we own a bunch of things and they're all kind of like stocks, let's say one goes up, they all go up. Commodities give us sort of that buffer, you might say. So maybe our stock is going up, maybe the commodity is going down, or maybe the stock's going up, commodities going up. They're not correlated. So commodities are actually good in that sense. Gold and silver are high though. And listen, when stuff goes up, it's gonna come back down. So you have to be prepared for that. Screen is good. Thank you. Appreciate that. How do you determine high volatility? So that's a good question that NQ has. So let's look at that. So it's trading options is all about not being perfect. Listen, in life in general, perfection is not a thing. We just want to approximate things. I'm looking at SoFi as an example. SoFi, I don't know how to pronounce that. I'm going to just say SoFi. And if it's right, if it's wrong, who cares? I care about what it's doing, not how to pronounce the ticker. But we see the implied volatility is a little bit different depending on the contract that we're looking at, right? But it's all kind of in the same ballpark. Okay, 59, 61, 64. I would say if I'm looking at implied volatility and the ticker right now is 22.28 per share, you can look at the money and it's 59, 60%. So it's not super high volatility. 50% is like a sweet spot. 60% is good. Not that it is really a good, not good. 70% is getting a bit higher. That's not to say it's bad though. It just means it's got a lot more swing, right? But you want to just estimate. Okay, SoFi has a volatility of about 60%. You could also look at IV rank. I personally don't do that generally, but you could do that. I try to make things super easy. Listen, options trading can be as hard as you make it or as easy as you make it. A lot of times people say, oh my gosh, the hardest thing, I'm trying to figure out what ticker to trade. Don't make it more out to be what there is. Like somebody earlier in the program that I'm running, this February amazing program. By the way, it's closed, so this isn't an ad because that's a closed thing. It's $500. There's 10 people, man. It's Monday, Wednesday, Friday for an hour a day. We screen share. We walk through all the trades together. That is like an amazing value to the cost. But anyway, in that, I might do another one in March. I'm not sure. But we were looking at Ford as an example. And one of the participants is like, okay, like I'm just starting. It's my first trade, $13 a share. Ford is like, I don't know, Ford's been around 100 years. Is it going to go bankrupt? There's always a chance that something can go bankrupt, right? But it's super, super low because it's been around a super long time. So instead of paper trading is goofy. A lot of times people say paper trading is good. I think it's a waste of time, honestly. First of all, like it doesn't really teach you exact specifics because like the fills are not accurate. It teaches you like you're not really using money. When you use your own money, that's when you realize and when you understand and when you learn. Just learn on an inexpensive ticker. Ford is $13 a share. I don't know, sell like maybe, this is what we looked at earlier, a February 13th, let's say, I don't know, a $13 put. It's paying $16 in premium. The delta is 23. What does that mean? It's 23% likely the stock is going to close underneath the strike price when it expires on February 13th. So it's not that likely. And you're not going to get hurt with a ticker like this. Worst case scenario, you pick up $100 of a stock that's solid on sale. Am I saying, to trade this? No, you got to make your own decisions, brother, right? So you got to make your own choices, but I'm saying you can't really get hurt with a stock like this. It's kind of a good teaching ticker, right? Let's see. Let me see some of these other. When do you usually exit if you have a 10 delta, so odds are in your favor? How do you manage that? That's a really good question. Listen, here's how I look at that, and here's a good way to look at that. If I sell a put and the price is like, let's say the price stays the same or it goes up, and then I capture like 80 or 90% of that premium. Let's say if I sell a put, I'll just use round numbers. I sell a put for $100, whatever it is, $50, whatever that number is. Once I capture, let's say 80% of that, I look to buy that put back because I want to like maybe give a little bit back to the market and take the risk off the table. And then oftentimes I'll sell another put on that same ticker, different strike price, different expiration. That's not rolling, by the way. Technically, it might be rolling, but that's not what I consider rolling. Rolling is only, in my view, and to make it easy to understand, buying your contract back, taking a loss, and then selling a new one. So in your question, NNQ, about like, buying your contract back, it's always okay, and it's never a bad idea to buy your contract back, lock in a gain, and then sell another one. Listen, when you're making money, who cares how, there's no perfection, right? In trading, in life, no perfection does not exist. It's totally okay to make money and realize gains from week to week, and it's all good. Good question. Olaf family, when do you determine when to leave shares uncovered? I never leave anything uncovered. NNQ, you got a lot of good questions. I love it. A lot of good questions. I don't leave anything uncovered, and here's why. You have two kinds of traders in the stock market. You have stock kind of people, and you have options kind of people. Stock people have this belief, oh my gosh, I love this stock, and I want to buy some, and maybe it goes up, and I want to make some money, blah, blah, blah. And you think that's cool. I think it's stupid, but you think it's cool. And the reason I think it's stupid is because if it goes up, you don't actually make any money unless you sell it, right? The other type of person, and by the way, I think my screen is not super clear. Sorry about that. I think it has to do with my Wi-Fi. But I think you're hearing me good, so the content is solid. Let me know in comments if you don't hear me good. The other type of person regarding options is creating income. It's all about cash flow. Listen, your paper gains don't pay for stuff when you go out shopping or when you go out to dinner or when you want to go on vacation. Your paper gains don't pay for that. Only cash flow does. So if you care about cash flow and you're in that type of population, which I'm in, then you always want to have a short call if you have some long stock, right? So if you own shares, you want to sell a covered call against that. So that's something that you want to keep in mind if you're in the options camp, like me. If you're in the stock camp, this is probably not the channel for you. There's probably other channels that might be better for you. Let's see. Hood is killing me. Yeah, Hood is down. Listen, it is. We looked at this in my program. It's down a lot. Like it was $150. Now it's $90 a share. It could go down more. So it's important that you guys are using a ticker and position size that's consistent with your account size, right? So if, let's say, you sell a put here and you buy shares at, let's say, $140, you have to kind of consider like, okay, how big is my account? How many lots can I buy if it keeps coming down? And also, we don't know what the bottom is until after it's the bottom, right? We don't know that. I mean, this stock could come down to $60 a share, maybe. A couple of things that you can do to combat that. You can see a couple of things, like you can calculate the intrinsic value of the stock. Like, so there's a calculation given its earnings per share and expected growth, like how much should that stock be trading at? If we calculate the intrinsic value of a lot of stocks these days, they're probably overvalued, right? So they're trading a little bit higher than where they should be trading. That's going to be another video. I'm gonna put it down because a lot of people are selling their shares. I don't know, maybe. You look at Form 4s for that. So Form 4 will show you insiders that are buying or selling, right? So this person, Jeffrey Pinner, sold. D is disposed of, sold 200 shares, 4,000 shares, 1,600 shares. So you could look at the SEC Edgar page, right, to see kind of like, has there been a lot of selling? So a lot of selling will kind of, push the stock lower. But yeah, you wanna see, if you like Hood at 140, you should like it at $90, and you should have more money to buy more if it goes down. So oftentimes when we get upset if our stock drops, we're getting upset because we don't have enough money, because we started off with the wrong ticker. Maybe we don't really want to hold that ticker. Maybe we don't have enough money to buy more if it goes down. So that's something that we want to better understand. Yeah. Let's see, what other questions? And then we're gonna usually sometimes these calls go for half an hour, sometimes they go for an hour. Today we're going to go a little bit shorter rather than longer, only because I just have a lot of things I got going on at the moment, and my Wi-Fi is also not that good. Would you say it's better doing weekly on lower market cap stocks than higher market cap stocks? I mean, it depends. Like, I do weekly on everything, so I don't ever do longer than weekly. I think weekly is better. I want to create income every week, number one. And number two, I don't know what the market's going to do in a month or 2 months. So I don't want to like wrap up my principal, my capital for an extended period of time. So I don't think it matters, big cap, small cap, whatever. I like weekly. I was making good premium on MU, but the price increase scares me. Please advise. I don't know if I can advise you, but I can take a look and help walk through it. Yeah, $437. That's an expensive ticker. Micron. It's a great company, great ticker, great stock. But you want to have enough money where if it comes down, you can sell more shares. Also, buy more shares rather. Sell another put, i.e. buy more shares. Also, you want to keep in mind this. When I have 100 shares of stock of something, I'm selling a call right at the money. If I own Micron at, let's say, $430, I'm selling a $430 call because I want the shares to be called away. I want to make money on premium. I just want the premium. That's it. And then if my shares get called away, I could sell another put and pick up shares again if the stock dips. That's how I do it. I don't care about like making more money on the stock appreciation. Again, there's two camps that you want to be in. You want to be a stock person or you want to be an option person. If you're a stock person and you want to make money on that difference and you want to roll your stuff because that stock goes higher and you think you're missing out, that kind of thing, then this is not the channel. This channel here is all about options and creating income. We don't really care where the stock goes. Maybe it goes up, it goes down. We just want to make income from week to week because that's cash flow and we want to like spend that, right? So yeah. Let's see. I'm going to do one more question and then, oh my gosh, I have so many questions though. Let's see. Let's see. I'm looking for a good one. Oh, my thing is buffering again. I'm going to do one more question. What kind of system do you use to sweep cash out of your account to use the capital like you say? Okay, that's a good question. Man, NNQ has a lot of solid questions. I love it. I just take money out, when I want to. So that $5,000 account that I haven't placed any trades recently, by the way, let me just pull that up here. That's this one. I think it was at 5,100 and I took, let's see, transaction history. I took $100 out recently because I just, let's see. Yeah, money link transfer, $100 withdrawal. So I just, I take cash out when I want to take cash out. And that's kind of how I do it. I mean, you want to do what's good for you. I think, why make cash unless you're using cash?